Welcome to Trading Equilibrium. I want to do a very quick video about volume. People ask me about volume in trading and how to use it, and so I want to cover that very quickly. So volume, like everything other than price, is simply an indicator. You hear the phrase price pays, price is the only thing that pays, and that's a cliche because it's true. Price is literally the only thing you're trading. Everything else serves to confirm or diverge with price, and you use them as indicators, whether that's volume, RSI, MACD, stochastics, advanced decline line. They're all used to either confirm or diverge with price as indicators. So we'll talk about volume. Here's a chart of NEO. I picked this one out just because it's a beautiful example of this. You're usually seeing traders talk about high volume moves followed by low volume consolidation. And that's exactly what we see here. We've got this high volume move up here on this left side here, and then this long consolidation period on decreased volume. And then another high volume upside move followed by decreased volume. These high volume moves show conviction. It's not you and me buying a few thousand shares and talking about it on StockTwits and Twitter. This is institutional buying. And those institutions are usually buying throughout this phase as well and have a buy order in here. And that's what creates support. But these large volume bars are what give you more confirmation, more conviction that the move is going to last. It's going to stick. So that's what you're looking for in general. In terms of volume confirming price action, high volume confirms the move, followed by decreased volume on consolidation. That's a good pattern that you want to look for. Let's go to plug. Same dynamic here. And we've got high volume here on moves up, decreased volume on consolidation, another more high volume area, decreased volume on consolidation, more high volume, decreased volume on consolidation, et cetera, et cetera. We've got some big volume here on this bigger move up. I'm actually long right here right now, looking for another move back up here, and ideally that would come on higher volume, so we'll see what happens. Another way to look at volume is when there is huge, just mammoth volume that is maybe 10x, even 20x average volume, particularly on earnings moves. This can happen as a catalyst, happens in biotech too, but usually happens on earnings moves. So this is Zscaler. Huge move back here with two enormous volume bars. The interesting thing here is the cliche of people say gaps always get filled. Not true. This may get filled at some point, but it certainly didn't happen quickly. And if you were counting on it, you lost money. This is a breakaway gap. A breakaway gap is one that's not get filled right away, and it's a breakaway from a technical area, and usually confirmed with high volume, which is exactly what we got here. So this is a way to look at volume as a huge confirmation with a price move. This is, again, not you and me on Twitter and StockTwits talking about it. This is institutional buying. This is repricing an asset. And we see this gap obviously still hasn't gotten filled, and just another one here just happened again. Huge volume. This is maybe 5-6x regular volume, and the move stuck so far. So that's another way to look at volume as a confirmation of price. If this huge move happened on low volume, first of all, it would probably be difficult for it to happen on low volume, but if it did, you'd be much more suspect of this bar. Another one, workhorse. Let's take a look here. I think this one's interesting because you see the bullish kind of volume pattern you want to look for here happened exactly like I've been talking about. And then consolidation. Move up, not as high volume, but still nonetheless a big move up. Then here you got some high volume on a reversal candle. So this is an inverted hammer here. When you have high volume coupled with that bearish candle, reversal candle, that gives you some conviction that it's really a reversal, and that is what ended up happening for a few weeks. So volume can be interpreted as adding conviction to a move. So if you're looking at this candle thinking, without volume, thinking, that's a pretty ugly reversal candle, look at volume, it confirms it for you. It gives you a little bit more conviction in your analysis. And snap, another one I wanted to show just because volume, everything else I mentioned, all those technical indicators are just that, indicators. They are not the be-all, end-all. You are trading price. So what we see here is high volume and this giant move up after earnings, then consolidation on low volume, but continued, we had some upswings here without the volume, right? And I actually took a trade from here to around here, and I'm in a trade right now from here to about right here, and we got low volume. I made money here. And if you're paying attention solely to volume and trading only on volume and not price, you wouldn't have taken these trades. So my point is, pay attention to price first and foremost. You still make money when you're trading price. That's the only way you're going to make money. Volume does not pay you. Volume serves as a confirmation or a divergence. A divergence, you could call this a divergence, right? So this price has been increasing, but volume has not. So that makes you a little wary of the move, right? That being said, I've still made money in 2 trades here. So you're always trading price. You're using everything else as an indicator to benchmark against price, and gauge your conviction on the move. All right, so that's a very quick video. Want them to be quick and digestible, and we'll see you next time.